It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this video newsletter on market psychology, opinions versus theses. Don't let your ego cost you money. In this episode, we'll examine the differences between having an emotional opinion and having a testable thesis, the cost of becoming invested in your opinions, and how to avoid doing so. Let's begin. I'd rather be rich than right. These are commonly uttered words of wisdom from experienced traders. But what do they mean? How is it possible to make money when you're wrong? Well, first, you have to decide, what is more important, being right or making money? This video newsletter assumes you're trying to make money. If so, it's important not to become invested in opinions. Instead, develop theses that are testable. If they're wrong, admit it and move on. No one likes their opinions to be proven wrong. But if you think about trading scientifically and not emotionally, then there's no shame in having one of your theses disproved. Let's take a deeper look at how we become invested in opinions in the first place. First, we have to realize that people are psychologically motivated by all sorts of things, not just making money. There are probably things in your life that are more important to you than making money, right? But what about in terms of stock trading? Is your goal to make money or something else? What's more important to you? Feeling good that you were right all along or making profitable trades? You have to decide. If your goal is to make money, then the most important thing to do is to remove emotion from your trading process. When you become invested in an opinion, it begins to cloud your judgment. And with the internet, chat rooms and stock message forums, etc., it's never been easier to become emotionally invested in a bad trading idea. How can you avoid becoming invested? First, don't formulate opinions at all. Develop theses. Train yourself to observe actual market conditions rather than predict them. Secondly, don't make your trades public. If you boast how you bought a certain stock on a blog, social networking site, or even around the water cooler at work, you will tend to develop an emotional investment in that trade. You won't want to be exposed as having been wrong, so you're more likely to hold on to a losing stock longer than you should. Along these same lines, don't get caught up in online discussions. And finally, always consider multiple perspectives when developing your theses. Consider both sides of every issue. If you objectively come to a certain conclusion, be sure to consider the alternative, the opposite even, in the back of your mind. And if you're proven wrong, then move on with the dispassion of a trained scientist. Learn from your mistake and live to trade another day. Check your politics at the door. Your political views have no place in investing, at least not if your primary goal is to make money. Partisan market analysis is a losing proposition. Don't allow your political preferences to color your view of the economy, and similarly, don't allow wishful thinking, or its opposite, doom and gloom based on political hopes or fears, to play a role in your trading strategies. Along similar lines, socially responsible investing. SRI asks investors to buy stock only in companies that behave in a certain way, such as protecting the environment or not donating to liberal causes or whatever. These are valid choices if your goal is something other than making money. But if you want to disassociate your emotions from trades, leave your politics at the door. And donate to your favorite causes after you've made a bundle on your profitable trades. The most common mistake for novice traders is not knowing when to sell. Novices think if they just hold on long enough, their stock will eventually get back to the price they paid for it. These are emotions speaking, not logic. All that matters is where the stock is going right now. And if that's down, then you need to sell. When you're wrong, admit it and move on. Holding losers is a no-win proposition. Don't hold on to your losers. The best way to avoid this mistake is to use firm stop losses and cut your losses at 7 or 8%, no exceptions. Instead of holding on to your losers, consider letting your winners ride. Sell just half your position when you reach your first price target, and let the winnings stack up. Failing to follow these rules is the #1 mistake made by novice traders, and why the smart money is able to turn a profit year after year. Use objective criteria when developing your theses. Technical analysis is not always right, but it is purely objective, not emotion-based. Technical indicators measure market sentiments of supply and demand, and the interpretations of these data are based on historical averages of millions of trades over the past 100+ years. Put your ego in check. These technical rules are smarter than your hunches. Warren Buffett, the world's richest investor, said it best. You only have to get rich once. Wait until you're rich to have an opinion. You'll be able to afford it then. If having an opinion, being right, or investing based on your social values is more important than making money, then so be it. But recognize these are impediments to your profitability. To recap, formulate theses, not opinions. Theses are scientific tests that are abandoned if they don't work. Opinions are investments in and of themselves. React swiftly if the thesis is faulty. Conserve your capital and regroup for the next trading day. We hope you've enjoyed this latest video newsletter from TradingTips.com. Have a wonderful day.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit tradingtips.com. Sign up for our free video newsletters. Become a successful trader by visiting tradingtips.com.